Welcome back. Dr. C.K. Narayan, Managing Director, Growth Avenues, is joining us right now. Dr. Narayan, thanks very much for your time. Good morning. Prashant here. Is the correction over?
Well, wouldn't we really wish it, Prashant? That's what I think everybody is waiting for. But what we do have is about a 9.5% cut from the highs that we have seen. And that has been probably the largest in this entire sequence, right from, let's say, August of 2013, when this entire up move began, till March first week when we hit the top. I think this is probably the largest percentage-wise correction of any advance that we have seen. So from that perspective, the market has changed its color, at least over the shorter term and even perhaps over the intermediate term. So I don't think we should be in too much of a hurry to call for the end of a reaction. 9.5% is certainly on the higher end of the spectrum. We typically tend to see or have seen across the last year and a half, all the corrections not typically exceeding about 5-6%. So we have probably dropped down into a bit of an oversold area in terms of the short-term trends. So we could have a rally, but I do believe that there's been substantial damage to the sentiment, and that might actually lead to a slow-paced kind of recovery. Not the kind of stuff that we have been used to in the past, but the slow pace might actually make it seem like it's not really over, and maybe it's just lurking around. The decline is just lurking around the corner, so that will make for a pretty slow pace. I think we should be on an upward trajectory for about 4-5 weeks, but I don't think the points gain across that 4-week time frame would be anything substantial. I would be more than happy to see something like 8850 or 8900 on the board. I think that is what would be the best expectation for the moment.
Okay, that's not too bad though. I mean, then you're going with my question, right? Your answer to my question is yes, that we have seen the end of the correction. Although, in terms of the kind of reaction we'll see from here is not going to be similar. The sharp bounce back in double time, that ain't happening. But the fall is behind us. That much you believe?
I do think that there is, the door on that has not really been shut, if you were to ask me on that aspect. But we are at oversold, so it would not be surprising to see a rally unfold even, prior to the lower support zones or demand areas being revisited again. So I would say on the correction part, the door certainly is not shut. But yes, because of the oversold status, I think we will have a slow-paced pullback. So it's a qualified yes to your answer to your question.
Okay. So what does one do with that kind of a view? Dip in a little bit, take small positions, test the waters. What should one do?
I think one would have to look at it from two different perspectives. Whether if I am a trader, then yes, this oversold area does make sense for me to come in and, as you rightly put it, try and test the waters to see whether there would be some sort of upside from here. But if I were a slightly longer pull trader or a longer pull intermediate term type investor, then I would think I would want to see more evidence that the decline perhaps is maybe completed. And, as a longer term player, I don't mind buying it a little higher than where the absolute bottoms would be, because I would be wanting to be largely with the trend. But I need to have reassurance that the trend, the declining trend in the short term is indeed over. So as a longer term investor or a longer term positional trader, I would want to wait. As a short term trader, I might want to prospect in this market with some buys.
Okay. So if you really can't control the urge to do something, then you could probably take small, long bets. But otherwise, you should wait. Ideally, you should wait, right? And buy a little higher and be okay with it, because that will be better than sort of, keep doubting whether the fall is over.
Yep. I think that would pretty much be the way to go. Yeah, because the worst place to be as a trader, short term or as a medium term trader, is when you have uncertainty whether the move that you are in is actually going to unfold in the way that you envisage. So that uncertainty is never good as a trader, because it keeps you from committing to a decent sized position. A, it keeps you second guessing your stops. B, and C, it also sort of prevents you from sticking with the potential that the trade might actually have. So I think from every aspect you are underserved. So I don't think that's the best position to be in.
The bank Nifty is down about what, 14-15% or so. It's corrected the most. Can we say anything confidently about that space?
No, not really. I don't think the Bank Nifty right now has the kind of strength in it to lead the market as it used to in the past. Earlier, the Nifty used to follow in the wake of Bank Nifty. The strides were initially put out by the Bank Nifty, and then the Nifty would follow. But I think those days are a bit past us. Both the private sector and the public sector banks in particular are still staying under, they are kind of down, pretty much knocked down, and they are not showing willingness to really get up on their feet before the count. So I don't think that really enthuses me to go in there and look for the banks. Yes, oversold status perhaps, yes, but I don't think the same sort of color that the Bank Nifty used to show in terms of leadership qualities are present in it at the moment. We'll have to wait for that to reappear before turning very aggressive on it.
Reliance Industries is back at close to about 800 or so, could be up a little bit with the market being up today. And oil stocks generally have been kind of weakish. But Reliance first, would you like to make a comment about that? How do you see it panning out?
I think far too many people in the market have been waiting for Reliance to kind of recover and lead the charge on the bull side. Yeah, you could probably count myself also in that brigade. Wow, but I think at every
down,
stage, Reliance is only disappointed.
It's at about 800
yeah,
right
I know.
now. I thought it would be higher with the market. It's down.
Yeah,
11 rupees.
Exactly. That's exactly the point I'm making, that too many of us have been expecting it to lead, and every single time we have only been disappointed with the performance of the stock. So I think, progressively people are starting to give up on it. The news flow hasn't also been particularly helpful either. And I do believe that traders are, constantly giving up on Reliance as one of their vehicles to lead the charge, and the more adroit among them are actually going the other way and trying to short it in the expectation that significant supports are actually breaking on the charts, and that is probably setting up the stocks for somewhat more of declines. There is a little fear about shorting Reliance because of its pretty checkered past, so I don't think people are very gung-ho about shorting. That is why you see, as it nears the support zones, people just, tend to withdraw. They don't really go aggressively and short it like they do with a state bank or, let's say, a PSU bank, etc. There is very little fear that, the carpet won't get yanked from beneath their feet. But that fear keeps people from really shorting Reliance, and that is a quality I don't see changing in a hurry. So maybe a slow downward drift is what is the bane of Reliance. So unless you have some positional play on it, taking advantage of Reliance as a trader seems to be pretty difficult as a call. But the trading advice in this would be to go short on any rally, because the stock has certainly not put on any, let's say, bullish garb at any point of time through the past several months.
Yeah, no, absolutely. It's at a 1-year low right now as we speak. So that's quite interesting. I think the last we were at this point was, I'll tell you, the 5th of March 2014. So, yeah, I mean, looks pretty bad. And the high on Reliance was what, about 1147, which was made in May of 2014, right after the election results. And from there, it's just kind of broken down, and it's down. What is down about 30% or so. Amazing, 30%. The market, by the way, even after this correction, should be up 25% or so from that point. So it's interesting what's happened there with Reliance. Any other oil names you'd like to take a shot at? Or I'd like to move on to IT, which has also been under a bit of pressure.
I think if you are looking at oil, maybe HP, BP are the only, they are not, they are oil marketing companies and not those, let's say, refinery types. Within the refinery space, I think if you look at Cain, it's probably trying to put in a bottom. This, this tax demand thing has come a little out of the blue when the stock was trying to stage a kind of a base and try to recover from it. But I do believe they will probably weather this particular storm. And I think if you're looking at oil stocks, maybe Cain would be something to look at, but this is only for very longer term players. I think the better place to prospect right now would be HP and BP. I think both of them are doing fantastically well on the charts. Not really speaking performance here, but on the charts, I think these two are really looking pretty, very attractive, I would say.
Okay, tech names, anything there?
If you look at the IT index, I think it has dropped down into a decent level of support, and typically the large leaders have been quite in line with the performance of the index. So the standout name there would be actually not the mainline stocks but Wipro, which is now kind of staging a much better trend situation on the charts. It's moved up to levels where it could actually get into a point of acceleration. It has reached there. It now needs to take that final leap. I think that would probably require a little bit of news flows from somewhere. I don't think that has yet shown up, but I would most definitely want to keep my eye on Wipro. That is something building up very, very well. I think the situation in IT is actually percolating down into the lesser names, not the marquee names, but then there are many, many more names like Mindtree and Hexaware, etc., which are all staking their claims for their names also to be lit up in neon, and this seems to be also percolating down into the small and mid-cap area. So I think as a whole, IT seems to be a pretty interesting place right now for traders, short-term investors, as well as medium-term investors. And the story is quite varied. It's not the same theme as it used to be in the years past. So now you got varied themes. And I think something like Ramco Industries, for example, that's just going from strength to strength. Polaris is staging a breakout. Rolta has seen a breakout after a very long time. I think Mastech has been doing pretty well on the chart. So you got a lot of names which are looking very attractive. I would be a very keen student of IT stocks across the whole year.
Great talking to you, Dr. Narayan. Appreciate you coming on with that perspective. It's always great chatting up. Thank you.